Good morning. Happy Saturday. Thank you for joining us here today on our part 2 of our Q3 Market Outlook brought to you by Naga Warrants by Kenanga. It's going to be an exciting day today, and as you know, we always start with some house rules. We're going to have a 45-minute session or so with our first speaker today, Mr. Johan Lee. He's the Chief Investment Officer at Sinostar Asset Management, and he specializes in an assortment of, he's an investment specialist with an assortment of products specializing in derivatives for Hong Kong and Malaysian markets, but mostly Hong Kong and American markets. Up next, we have the Q&A with Mr. Johan Lee, followed by Ms. Isabelle Zhen, warrants issuer at Kenanga Investment Bank, which will be 45 minutes with her, and a 15-minute Q&A, but hopefully, based on your feedback, we'll try to lengthen a Q&A. So for today, it'll be a bit different, half an hour session with Ms. Isabelle, and hopefully a 20-minute to 30-minute Q&A. We can ask all of your questions which you've never dared to ask before, or questions you've asked but never got answered. Today, it's actually quite momentous for us. We've reached the halfway point of our webinar series. That's a big deal. Since 2020, we were the first issuer to actually have warrant webinars, and we won a Bursa Excellence Award for being the best warrants issuer and the best house in South Asia and Southeast Asia for the SRP Euromoney Awards for educational initiatives as well. And it's been tiring, I'm not gonna lie. We've actually done about 40 webinars by the end of this year. So I just wanted to say a big thank you to all of your support. I know sometimes it gets a bit demotivating when the markets are down, and when the markets are up, you wish you had more webinars. Give us feedback, we would love to know, and we want to support your educational journey, which I believe is a lifelong journey. But anyway, enough about that. We've got our Garmin giveaway that's happening for the next 1 month, for the month of July. And it's called the Gigantic Garmin Giveaway, which I'll be explaining later at 11 a.m., where you just need to screenshot your profitable trades from the entire 2022. It doesn't have to be for the month of July, but say 1st of January until the end of July, if you've made any profitable trades of Kenanga warrants, may it be Malaysian equities, or for Hong Kong warrants, index, or single stock equities, screenshot it, send it to us, and your first 10 people who send it to us every week for the month of July will win a Shopee voucher. And we're going to choose them as well to win Garmin watches. So we've got a lot of things to give away for the next 1 month. And today as well, we're giving away 10 Shopee vouchers for the best questions that you can ask Mr. Johan later, and myself, of course. So let's get to it. Thank you again for joining us. If it's your first time joining us and first time seeing Mr. Johan, please press number 1. If it's your second time joining us, 2. If it's your third time joining us, press 3. If you've joined us 40 times, press 40. Even though I doubt it, that's not compulsory, okay? That'd be crazy. And if you've watched our videos on YouTube, please press YT so I know where you're coming from today. So, Mr. Johan, good morning. How are you doing?
Morning, Isabelle. Thank you, Kenanga, and thank you, Isabelle, to include me to this meeting.
Always a pleasure, especially since you've always been giving us exceptionally accurate target prices for the Hansen index. I'm not going to hold it to you, okay? Don't have any pressure, all right? But you're our favorite speaker when it comes to giving us market commentary on sector as well as market outlook for the Hong Kong markets, and we really appreciate your time today. Where are you calling us from today, Johan?
Hong Kong, in my office.
Thank you for going all the way to your office, Mr. Johan. Over to you.
Hi, everyone. I just share my slide first. Well, today, like before, I would like to talk about the HSI market. Since last time, this in April, the index was at 21,800. Right now, the index is at 21,850, so it's very close. Actually, the highest and the lowest index point has not changed since March. So in Q2, actually the index is trading at a very narrow trading range. The highest close this year remained at 24,900, and the lowest close remained at 18,400. It all happens in the first quarter, in January and in March, as the lowest point. And then ever since that, in Q2, for April, May, and June, the index just briefly dropped below 20,000 and then rebound significantly from that level. The difference between the high-low is the same. 6,500 points is quite a lot for a year. And then quarter over quarter, the HSI dropped only 137 points. But I would like to point out that the Hansen Tech Index, instead of trading at a very downtrend, it is already breaking up some resistance point, which I will have some charts for you guys to look at later. The Hansen Tech Index tracked major technology players listed in Hong Kong, was actually up 7.4% quarter by quarter. And then as later you will see, the HSI Tech Index should have a support at 4,750 points. And then I expect for the maybe next month or two, the Hansen Index should be ranging from 20,250 to 22,450. So I expect a 2,000 point range, trading range. First of all, I show you guys this HSI's daily chart on April 7th, which was the same as the last time, because I would like you guys to have something in mind that how it went before. So again, the index reached the 80,000 point level and then have a huge rebound back to 22,000 level last time, and then testing the resistance. It's a very strong resistance. So let's see the most update charts. This is the update chart. So right now, actually, after our last meeting, the index do test again the 20,000 point level, but within 2 weeks it gets some kind of rebound. And right now I draw some trend line here. You guys could see the support is actually higher and higher. For a longer term one, the support point is reaching the 20,000 level. And then for a shorter term, it's even steeper. So I will expect the index may test this level around 21,500 next week, and then it has a great chance to break out the 3 times resistance level of 22,400 points. Actually, the index has been testing that level for quite a few times. already within the last 2 months. Interestingly, if you see the Hansen Tech Index, which is we're showing now, is a little bit different. It's actually breaking out from one of the quite resilient trend line. You see, it's been earlier than HSI. In June, it's already tested the trend line and then successfully break out and then consolidate within this range. So I think very likely for Hong Kong stock market, the bottom for this year has been seen already. The only concern for now is at the US side. If the collapse of the equity continues, it may drag down the Hong Kong market too. But I would expect that the drop will be temporary, and it could resume an uptrend very soon. So I would suggest investor to buy on the dip, but do not need to chase in any significant rally for the Hong Kong side. When you see the tech index, I also have two support line here. Actually, it's a resistance line here is 4,900 and then 5,700. I would expect if the market is doing well, the tech index should trading up and down from this level. And the support should be here around 4,025, 250 points. Okay, in terms of the sector performance among the Hansen Composite Index, energy was like last time was still the best performing sector, with the coal producer up quarter have a 58% jump, and for oil and gas it has a 11% jump quarter to quarter, while the telecom service sector is the worst quarter from quarter. It's dropped negative. It dropped 500%. It's mainly it's actually a good sign. You see, investor is trying to pulling money out of those dividend heavy stocks like telecoms service, and then trying to buy tech. You see the chart here. I actually pull out the quarter the capital flow for the last 3 months here. The most significant was the software and service, and then automobile and healthcare. Healthcare has been less favorable for the past 4 months, but during the recent 2 months, April, May, and June, it actually performed quite well. Software has always been the heaviest capital flow inflow outflow sector because it has a very high heavy weight in the index, so it's not a very good gauge to see if this sector is good or not. But healthcare itself is not traditionally a heavy weighted sector, so I would say there's some sign of money pulling into the healthcare, property, and banks, which is later I will talk about this sector. And also insurance is doing quite well for the past 2-3 months. And here I have a chart seeing the real performance for those sectors. For the 3 months end, coal producer has been up 58% because coal price keep rising through the Q4 of 2021 until to the first quarter. But I will say it will slow. The coal price won't keep rising because the government has already imposed some restriction for the coal investor on setting up the price. The other well-performed sector is automobile, which has been beaten very hard last year. till the Q1 of this year. Right now has a very generous rebound because the government has keep pulling in new policy to support new energy vehicle buying and even traditional automobile buying. So this sector has been doing well for the last 3 months, and I expect it won't. It will follow the market, if not going to lead the market. So this is a good sector to look in. And oil and gas, I think for the oil price, very likely is already peak this year at 130, which happens during the Russian and Russian war. Right now, the oils actually get trapped between 100 to 120. I think it's going to the oil could pass 95 level in the next month, but I don't expect it will drop more significantly. However, when you see the oil and gas sector in China, I think CNOOC, Petro China, they all will suffer a little bit. And Sinopec will suffer even more because the government has already said that they want the gas price, the end products have a stable price, and even they would like to put a cap on the price for domestic use. So I would say Sinopec will be the worst performer between the three oil companies. And for the gas company, I think natural gas company, I think it will do well because the natural gas price has been rising a little bit, and then the new energy use has also support this sector. So if oil and gas sector, I will more keen on buying natural gas company. Well, other sector I like to point out is food and beverage and retail. Retail is still at the bottom of the performance charts here, but I think it will be outperform the others if the COVID cases continue to drop in China and the social lockdown and social restriction has been lifted up. I think those retails sector like sportwear, other apparel should be doing well. Well, and for food and beverage sector is the same idea. I think those restaurants, beer company, even some like a dairy products company that should do well in the coming months. Okay, for this 2 months, actually 2 days ago, the Hansen Index Service Company just announced another change in the Hansen Family Index. It's all because the prolonged suspension of its shares of the exchange. It's those 9 real estate company. They are 813 Xiamu Group, and then Kaiser Group, Color Life Service, Fire Rock Holding, and then another real estate giant, Sunac China Evergrande, and Aoyuan China Aoyuan, and even Evergrande Property Service. So these 9 stocks will be removed from all the indexes. It will come back if they resume trading, but there's no news about that yet. And a lot of them, they still could not release the annual results yet. So there's no way they could resume trading because there's rules that if the company could not release their financial statement on time, they should halt trade for a long time until they could release those data. And one inclusion for the China Enterprise Index is the 96226 Bilibili. There are some key events I would like to point out. The biggest events globally is the Federal Reserve has dramatically shifted its monetary policy in this year. Change includes significantly increased interest rate and a reduction in the Fed's assets holdings. The facts appears determined to sidetrack the persistent trend of higher inflation that first emerged in 2021. The chairman has been actually Yellen and Powell both they apologize for seeing the inflation as a short-term phenomenon is wrong, and then they revised their view on the inflation. So the market actually expect the Fed will keep raising interest rate for quite a few times. The Fed raised interest rate again in May by 0.5%, and then raised again at a whopping 75 basis point interest rate in June. In the June increase was actually the largest Fed fund rate hike in 28 years. That shows that the Fed is very worried about the inflation more than the economic growth. The Fed has put in place a plan to reduce its balance sheet of nearly 9 trillion in assets holding. It's accumulated in recent year after the COVID outbreak because of the quantitative easing. It's planned to in around September. Actually they will reduce the portfolio by 90 billion per month after September. So the market see this reduction as one of the most concerning factor for the equity market. It's been already showed in the US dollar index. It's been rising significantly. If you have followed the currency, you will see already the Japanese yen has been breaking into multi-decade lows, and also the euro dollar is already very weak, and even for RMB, it has become weakening month by month. So according to Powell, these steps are all the beginning of the federal money tightening measures. This chart I showed you the Federal Assets Reserve balance sheets. You could see that from the pandemic here, starting the pandemic here, the Fed has been expanding their portfolio and keep buying mortgage-backed securities, treasuries, securities, and all other kind of corporate debt. And they building up the portfolio now worth 8.9 trillion. It's been almost double from the pre-COVID area. Okay. The Russian-Ukraine conflict still continue that affect the commodity price continuously, and then also for the most concern is for the food supply, because for energy, Russia actually represents 22% of the European gas supplies, and for oil import, 25%. And even worse, recently, US and all other G7 country has been thinking of restricting the price for Russian oil. If that's true, it will actually make the Russia suffer more, and it may even reach the Russian government to lower their oil export, and in return, it will lower the global oil supply. but I think this may not be very likely yet. The logic behind the G7 is if they put a cap on the Russia oil price, they will have less financial support to the war, and eventually they will be forced to withdraw their troops from Ukraine. And also it could encourage other country to buy cheaper oil from Russia, and eventually it may drive down the inflation. That's a theoretical expectation from those countries. And but right now, from the headline, the Russia and Ukraine war has not been affected market as much as before now. So only the commodity and the food supply is the most concern for the investor. And China real estate market has shown some sign of recovery. More cities have announced public policy fine-tuning since March 30th. Some cities removed the home purchase restriction, allowing home buyers to use the house provident fund for down payments. And some cities also had lift the home purchase restriction and home resales restriction in one go. And also for commercial mortgage, some cities has encouraged the bank to give a more generous support for those buyers. And continuously, the state-owned enterprise and other asset management firm has buying those real estate companies project. And then for the market expectation on US data, it's actually people are thinking for the past week, people think the rate hike in 2022 could actually slower than previously expected because of the slower economic growth and the recent pullback on equities. And then for the Q4 GDP, they forecast 2.2, but for next year, actually, people are pricing an even more pessimistic forecast. That's why for next year, actually, the market right now is pricing in a decrease in rate. I think that reflects the slower economic growth, and even there's a great chance the U.S. Economy will go into recession next year. And then the wage price spiral still overhang the market because recently the non-farm payroll has been quite well doing, and then that shows the job market is still very tight. And for the next week there's another non-farm payroll. If the non-farm payroll is doing well, I think if there's more job going into the market, I think the market will have a bigger rebound. Because this time people more concerned of U.S. economy recession more than rate hike, because most of the rate hike period has been priced in for the last 2 months. For Hong Kong, I think the more favorable sector is retail, like sportswear. Later I will talk about a bit more. And then utilities, because of the lower coal price coming, and then traditionally the electricity usage should be higher during the summer. So going into July, August, September, the utilities should do well. And insurance company, I think is going to do well too, like last time. Based on the market sentiments in the property markets, I think insurance company may recover a lot of their loss from those heavily invested real estate debt, or they will have a sign of recovering some of their
recording in progress.
So I think insurance is one of the good sector in the coming month, and also real estate developer and property management. They are trading at extremely low PE and then very high yield. Of course, some of them, they may not pay the yields in the future, that the same dividend yield in the future. But I would say we could stick to those SOE supported developer like 960, 2007, and also some state-owned developer. And I think basic material will continue to have some selling pressure, like last time I said, because the whole inflation thing has already been pricing in, and I think investor may will less likely to put more money into the base material sector. Okay, let's talk about some retail shops like Sportwears. In Shanghai, over the past weekend, very recently, it's posed a very healthy reopening since June 1st, because it has been locked down for 2 months now. And then the traffic to Sportwear store has reached 40 to 60 of normal mall level. And then the store and also 80% of some street level stores has been reached. So it's outperformed a lot from other general shopping area. So I would say people are more keen to go to the sportwear shops to buy apparel than buying all other clothing or stuff. There's stronger traffic in Li-Ning and also Nike, and also the discount control means that they have the sales is less heavier now for Li-Ning and Fila. Fila is actually owned by Anta. 2020 is the code name, and all other brand has similar discount. And we expect, I would expect the retail sales will continue to recover. It show a very good sign in May, June, and July already, which has a very poor trend in April due to the social lockdown. For the stock, the market actually like Xtep 1368 and Li-Ning 2331. There's 4 reasons for the market love this one, because they have a very strong effort on putting up online and offline channels, and also they keep producing new products, and then they keep hiring KOL to evaluate their brand equity. And also the overall sentiment for the local brands is good. The one sector I think we should avoid is Macau gaming sector, because I don't think the government will like people to put money into these activities. So even the social lockdown has been removed, I don't expect there will be a lot of travelers, but the amounts they could put into the gaming, I think will be significantly less. So I think investors should avoid this sector. Okay, thank you. This is today's update.
Extremely enjoyable, as always. And I love how you always get straight to the point. I always think it's a gift to be able to summarize what's happening in the markets rather than giving us a whole essay on what's going on. So let's get to those questions right now. In the meantime, everybody have a bit of a stretch while I go through the questions. We have a few mostly on technicals of the Hansen index itself and a few stock picks that people want you to look at, Johan. So let's get to the big picture questions first. Let's see, the first one comes from Mr. Seong Kok Tan. Next week, HSI support levels are projected to 21,500 to 22,400, right? Will it go down to 20,000 or will it, let me try to read his comment. Since HSI index was up 326 in May and 444 in June, or will July expect to close further? He's asking for more of a short-term target from you, Johan. Mr. Seong Kok Tan.
I think next week is quite crucial for US side. So it will affect the opening for HSI next week because for the whole next week, people will expect the non-farm payroll coming out on next Friday. So there will be a lot of action, and then it is also the first week of the Q3. So fund manager will shifting their position. But like yesterday is the first day, I think it is a good sign that U.S. index has rebound from the bottom and closing high at the end of the trading day. So I would expect next week Hong Kong index won't be a good week. Maybe there's a 200-300 points drop, but approaching the end should have a good rebound and trying to test the 22,000 level again.
That means primarily an uptrend, but of course, with Hang Seng Index, there are always going to be retracements for a few hundred points, correct?
Yeah.
All right.
My advice is buy on a dip better than chasing. So if you see the market dropping 300 points, and there's no big news, then I think should buy in. Yeah.
And another one from the same individual, since it's the same theme. I especially like this individual, Seong Kok. I remember I've spoken to him a few times. He used to trade DNO in Malaysia very profitably, and when he realized that Malaysian stock equities weren't moving as much as Hang Seng, immediately he migrated over. So I love these kind of flexible traders. So his next question is a little different. Does the HSI trend closely follow CSI 300 index? Understand that it's 80% correlation, especially in this year. Mr. Johan, your comments, please.
Yeah, actually, I would say it actually underperformed the CSI 300. But yes, the correlation is quite high for the direction. But CSI has actually outperformed the Hong Kong index, and also for the Chinese gem broad, for the small cap, is actually hitting 52-week highs last week.
Excellent. And the same question about disparity as well. I think everybody is looking for a leading indicator to help them assess the Hang Seng market. So there is an individual called, lost the comment, KHK. What are the reasons for the price disparity between same stocks or dual listings in Shanghai and Hong Kong?
For those stocks, it's actually follow the A shares more, but the correlation is not always the same because, for example, there are some biotech stocks that been listed in the China. They are not usually moving the same direction even daily. One example is recently even coal producer for the Hong Kong side is actually rebounding, but there's lack of movement in the China side. So even the same stocks, it may not go the same direction. But for the sector, it will. so I think investors should take more time looking into the sector movement of China A shares instead of individual stocks.
I understand. Thank you, Johan. And from Stephen Lai, this is another big picture one tied to the Fed. Persistent inflation and aggressive rate hikes by the Fed has caused much uneasiness in the market. This has economists predicting a recession by year end. What's your take on this? And if we do enter a recession, just like you said, Johan, how long do you think it will last?
Wow, this question is quite tricky because this all depends on the Fed action. If it's going to fight the inflation significantly, I think the recession could quite long. But so that's why I think every month, first week of Friday, would be more important because people keep looking at the job data market, job market data. So I will say every month, the first week will set up the tone of for the rest of the month. Right now, actually, people are expecting a recession next year, so people actually investors are starting to price in interest rate, a lower interest rate actually next year, which is not been suggested for the past 2 months.
And we all know every different Fed head, they always have a different idea of what the Fed is going to do, even, right? And even before they announce it, there's all the speculation that goes on board, and that usually, they hope that that will execute their policy for them before it actually happens. They hope it'll be a self-fulfilling prophecy.
Right. And even though the economy is not entering recession, I think the sluggish growth should be last for many years, maybe 1 or 2 years at least, because of the QE ending. That actually the big part that scare the market right now. Interest rate people expect already how it will increase, but for the Fed balance sheet shrinking, I think investors just start paying attention to that.
Agreed. From Mr. Yuk Long Liu. Hi, Mr. Johan. Based on your experience, do we need to apply hedging for our portfolios during this volatility period? And if yes, kindly explain how would you hedge your positions, please?
I think at this moment in the Hong Kong market, we don't need to hedge because I think very likely the downtrend has been over this year. It could be trading in a trading range, but it won't be like in the Q1 there will be few thousand points dropping. So I don't think there's a necessary for hedging right now. If for hedging, you could buy some leveraged reverse ETF in Hong Kong. They are one of them are 7500 that chase the index, Hansen index. It actually has a 2-time leverage. So every time the index go down, it will go if the index go down 1%, the ETF will go up 2%. Yeah, but these ETF you could not hold long because it has a quite high trading cost. I mean, it has a premium embedded into those and assets value. So if you hold it too long and then the market is not going the way that you expect, you actually will lose money by just holding it. The other one is 7552. That's chased the Hansen Tech Index is also 2-time leverage. But right now, I don't think that's necessary to use this instrument.
Understand. And of course, for our traders out there, you can always consider put warrants on the Hang Seng Index. We showed you how to use those as well if you consider hedging. But if you are more clear-minded in the direction of the Hang Seng as it shows technically, then you would put a smaller proportion into your hedging portfolio rather than do a 50-50 or something crazy like that. A very small percentage if you do decide to hedge your positions. Stephen Lai, what's your year-end target for HSI? Oh, everybody loves asking you this question, Johan, because you got it right for 2021 last year. So no pressure at all. I'm pretty sure, though, that this is the reason why everybody came for today's webinar. So, Mr. Johan, any targets yet, or would you like to look at a Q3 or Q4 target first?
I think Q3 will be a range trade. As I just mentioned before, 22,400 is a quite significant resistance. If once it breaks, it will still testing a lot of resistance towards 25,000. So I don't expect the index could go back to 25,000 level. So I would say for the next month, if we are lucky, we have a range trade and then testing a little bit higher. But 23,000 should be a very good high target.
All right, you heard it here first. And if Johan, you get it right, dinner's on me when I swing by Hong Kong again. Same question for Wayne Kit Yong as well. Mr. Johan, your crystal ball range for the Hang Seng Index, he's already answered that question. Thank you very much, Wayne Kit Yong. Sam Kaur is asking you for a bit more sector now. Kindly comment on the EV sector in China, please.
Oh, it's actually doing quite well. I remember last time one of the audience asked about which one should be the best. The market is actually quite seeing the same target like me. Because the BYD has been doing extremely well for the last months. It has been rising from 200 point to 200 to now right now is above 320. I think this one is remain as the best NEV pick. So if you want to pick one, I would say just buy BYD. The other three smaller player, they all have their problem. Like the new recently, they have been released a short sale report. Even though it's not affected a lot, but it's still there's some overhang. I think investors should really think. But all the EVs producer has very good data monthly. Yeah, I think it's a good sector, and then I like BYD better than others.
Oh, wonderful. And since we're talking about specific stocks at this point, we have a question from Tan Gan. Please comment on Sense Times. The code is 0020.
Okay, Sense Times actually has been dropped almost 40 or 50% last trading day, mainly due to the lift up restriction of those previously invested investor before the IPO. I think it's a very rare case. The company itself is, of course, it's pricey, but I don't see the company should trade part of the market cap because of the selling. So I will expect maybe 1 month or 2 months from now, after the selling pressure has already reflected, Sense Times should go up a little bit higher. That's what I heard. Most of the investor from the IPO has a cost of 3.5, 350. So right now it's trading still below. If I were the investor, I will sell every time near 350. But I don't suggest anyone to bottom fish this one yet, because for the private for private investor, they may have even higher tolerance on margin call. So yesterday, the last trading day, the 50% drop may not reflect all the selling pressure. So a very good chance next week the company may not have a good rebound and may even go lower. So I would say if investor wants to buy, should wait and see the volume getting lower.
Yeah, I know what you mean. Everybody's really hyped up about these kind of stocks, especially if they are tied to smart cities, smart businesses, and these kind of very tech-related companies. So you've always warned us about those currently in Hong Kong, and I suppose you're just following through on the same commentary that you gave us in Q1. So you really appreciate that, Johan. Stephen Lai, with high food inflation and food security issues facing all the economies now, which or if any food stocks should we be looking at?
I think for the food stock plays, it's been priced in mostly. I see the market actually they are not as keen as before. Like some fertilizer in US, they already off their peak for almost 10-15%. It's been big correction for those fertilizer. And for the if I say in Hong Kong market, I think you could look into those restaurant company like Shabu Shabu, 520 and 6862. That's another restaurant chain. I think they may benefit from the ease of the social lockdown from China. And they have been already hard hit by the food inflation and lockdown. So I think the price is quite cheap now.
Thank you. And our final question from Joanne Louis. A shares has been doing well for the past few weeks. Will Hansen Index follow A shares or Dow Jones for the trend if we are trading Hansen Index Structured Warrants in Malaysia? Will Hansen Index follow A shares or Dow Jones? Is there a leading indicator which she can look at?
I think A share and Dow Jones is two separate markets. It's actually more affected by those headlines instead of the real Dow Jones Index trading sentiment. For Hansen Index, I think when this is open, it will be affected by the US index. But maybe 30 minutes after the trading, the effect will be lessened, and then the index actually follow the A share. So I think if you see a big movement from the US side, then for the first 30 minutes, you may need to be careful. Otherwise, you could just stick with the A share index and then to trade Hansen.
I've got this question from a trader earlier this week. We always notice that during the lunch break, the Hansen Index futures is extremely volatile. It moves a few hundred points during the lunch break. Is there any comments you would like to give on that, Johan?
Sorry, is it about the gaming?
No, during the lunch break, the Hansen Index futures, they move in a very volatile range, a few hundred points up or down during the lunch period of maybe about 1 to 2 p.m., especially that period. Is there any comments you would like to give on that?
Well, actually, that part, I think if you have position, I think you need to, during the lunchtime, you need to read closely the news from the HSIs because during lunchtime, there may be some important news released. Like last week, there's news about the real estate and there's news about those tech giants, and it's all coming in during lunchtime. For example, Tencent during the lunch, the one of the largest shareholders announced they will sell their position daily, and then it's affect the whole index, all the index actually, because Tencent is such a high concentrated stocks for both Hansen Tech and Hansen Index. So investors should read carefully during the lunchtime any market moving news. Yeah. So and make their decision.
And our final, I was going to say that was our final one, but we have a question here from Dan Van, and we'll just ask that one, right, before we let you get on with your day, Mr. Johan. From Dan Van, any idea why gaming counters see sharp gains over the past week when the Chinese economy is opening up? Why do you recommend to avoid this sector you mentioned just now?
My recommendation is for long-term one. So I'm trying to avoid any losing money chance. It's actually trading at very, very low cost, low valuation. So that's why over the past week it's been rebounding very well. But compared to others like the airlines, compared to those hotel chain, compared to some travel agency, it's actually not as good as those sectors. So if you want to play those, you want to participate into the opening up trading idea, I think those three sector, airline, hotel chain, restaurant, is even better than the gaming sector.
Thank you. And as you mentioned just now, you are looking at a more long-term view where you foresee the Chinese government's regulations coming in and clamping down. Because for you, you look at from an asset management perspective, not so much from a short-term trading perspective. So it's a very long-term view where, like you said, Chinese regulations could come in and wreak some havoc on those share prices, even though there is a small uptick in the past few days. Last few questions. We'll just ask this final one. Mr. Johan, what are your top picks for the insurance sector after the worst in property markets appear to be over? Would you consider Ping An?
Yeah, I think Ping An is undervalued because it holds a lot of real estate company debts. And once those property market recover, I think Ping An will outperform others. And also, I see a lot of money pulling into insurance sector for the past month. So, and on any pullback, I think insurance sector is better than bank now. Also, another one I think is good is AIA. If it has two reasons. One is the property market. The other is opening up economy for China. So AIA could benefit from both ideas.
And AIA does have a great weightage on the Hang Seng Index as well.
Yes.
Justin will end this on a light note. Justin Tan asks, who moves the market? Retail investors cannot move the market. HSI range is around 300 to 500 points. Who decides this range? I guess she's asking, apart from, because in Malaysia, we've got a lot of individuals, they like to say that it's the instis that move it, Co-op, LTAT, EPF, because I mean the big boys that move the market, institutional traders. For Hong Kong, we know that there are many different asset management houses. For example, yours, which is humongous. But for Hong Kong markets, who moves the markets?
I think the money from China to participate a huge role in moving the market. You could look at the Stock Connect southbound. The stock that they buying usually keep going up. One good example is 1211 BYD. During the last month, it has been suddenly moving into the top 10 net buying stocks. So I think, and the sector rotation is playing a very huge part for the equity trading. So instead of the HSI movement, I think you just need to get to, like before I mentioned, you need to watch closely those 5 top heavyweight company like Tencent, Alibaba, AIA, and then some bank company.
Excellent. Thank you so much. And as always, Johan, you are the man who knows something about everything. No matter what question we throw at you, you always have an answer. We really appreciate that, Mr. Johan. It's 11 a.m. on the dot. I really appreciate you spending your Saturday morning with us. And I'm sure our traders, they have taken away something useful as well. Thank you, Mr. Johan. Traders, a round of applause, please, for Mr. Johan, all the way from Hong Kong.
Thank you, Isabelle. Thank you, Kananga. Thank you, everyone. I hope I could help. The comment could help you guys to make more money.
Absolutely. That's the name of the game. That's the only reason we're here today, actually, isn't it? And thank you. You give us very on-the-ground, insightful things that sometimes is a bit hard for us. We feel a bit further away from Hong Kong, even though the wealth of information available now is so wide. But at least you give us a framework so we know where to put whatever information and news flow we receive. Thank you, Mr. Johan. Have a lovely Saturday.
You too. You guys too. Thank you.